So what are we talking about today? We're going to talk about investing in the stock market, something that I'm very passionate about. But let me get my YouTube going. Okay, we got that going. Good, very good. All right, let me record here. All right, hello, everyone. Myrna Laine-Hyppolite here. Let me pop up my little presentation since it's going to be short and sweet. I hope that you've been enjoying the summit so far. And if you missed this morning's speakers, they were fabulous. We talked about how money works. We talked about what else? Your health and how emotions can impact your health, unhealthy emotions. We talked about igniting your worthy dreams. We're going into 2025s. What are your dreams? What do you want to know? So if you missed any of those talks, we are going to be having the recordings in the Facebook group so you can catch up and listen in, because we had some valuable gems dropped this morning. All right. So I got to do my first disclaimer first, right? Required. Empower Financial Wellness, myself, any of my partners, we're not investment advisors. So any information that you're going to hear about today during this presentation is strictly for educational purposes, informational purposes, and does not constitute investment advice. So hear me, does not constitute investment advice. If you see me kind of looking to the side, I'm not giving you the side eye. I got a chat going on over here. So if you have questions, pop them in for me in the chat. Okay, so this is me, Myrna. So some of you know me, some of you don't really know me. Somebody just pulled you into this Women's Wealth and Wellness Summit. And some of you know me very well, some of you don't know me. So let's just level set for everybody. Myrna Laine-Hyppolite here. I have about 30 years of experience in the realm of finance. Yes, I know I look young, but yes, I do have 30 years of experience in finance, various aspects. I am an Ivy League graduate from Dartmouth College. Loved it so much, went there twice. I got my bachelor's and my MBA from there. And I am currently Chief Financial Officer for a network of about 90 schools. So very demanding day job. But I also am a financial wellness coach. And what do I do? That's my passion, and what I call my recent purpose is really helping powerhouse women like yourselves turn their amazing income into their first or second $1 million in net worth, or third, even if they're new to investing in the stock market. So I founded my company, Empower Financial Wellness, at the end of 2020, because I really wanted to help women, help them in terms of understanding how they can enhance their sense of financial wellness, their financial well-being. What does that mean? It's a buzzword, but what does it mean? It means that not being stressed over money, having control of your money, having the ability to absorb a financial shock, have emergency funds, having the financial freedom to live the life that you want to live, right? If you want to go ahead and, wake up, take that cruise, you can go ahead and go and go on the cruise. If you want to go take that trip and go to the Atlantis and Bahamas, you can do that. You want to have options. So having financial wellness, if your money house is not in order, I don't care what you tell me, the rest of your house is not going to be in order. So that's why I founded my company, with the objective really to help women. Now, let's talk a little bit about investing. We're going to talk about investing, and investing more specifically in the stock market. You can invest, obviously, in real estate. You can invest in crypto. You can invest in a number of things, but we're not going to talk about that. Today, we are going to talk about investing in the stock market and how you can invest in the stock market to fast track your money growth, right? Because we talked about this morning about how money works. And in order for your money to double at a more faster clip, you've got to have a higher rate of return. Putting your money in a sleepy savings account is not going to help the cause. It's not going to help you fast track that money growth. Now, before I even go into my investing comments, let's talk a little bit about savings. Savings is a good pillar. It's a starting point, right? It's a pillar for wealth, but you cannot save your way to wealth. I always said that, and Cheryl said that this morning in her conversation. You cannot save your way to wealth. So that being said, you got to have a good savings account. Tell me in the chat, if you are saving, you have a savings account, what's the interest rate on that account that you're getting on that account? If you don't know, tell me you don't know. But if you know, put it for me in the chat. And let's do that so that we can move on to our investing comments. Anybody willing to tell me in the chat what they're getting on their savings account? Any takers? I don't see any takers. All right. 4%, Cheryl. Okay. Anybody else? So if you do not know what you're getting on your savings account, that's going to be your homework number one. Yeah, I give homework on my talks. Your homework is going to be, okay, I see Alexa, 4.15. Christine, nothing. Okay. So your homework is, one, you need to be able to find out what that rate is. Two, if it is less than 3%, I need you to go to your bank and tell them, what have you done for me lately and what can you do for me? That is homework number one. Because right now interest rates are going down, right? So you can get at least 3%. You need 3% so that you have that for your, what I call your peace of mind funds. I don't like to call them emergency funds, but you need to have at least minimum 3 months. If you have, a job where you have a business where it's harder to replace your income, it's going to take you longer, then you need to have more money. That being said, those monies need to be sitting in a vehicle where you're going to generate at least 3% interest. That's number one. So now that we've gotten the savings out of the way, let's move on to the investing track. So investing as a way to fast track your money growth. So let me show you an illustration real quick to tell you the difference and to show you the difference that it makes when you're saving versus when you're investing. So here you have two people, right? Two people doing the exact same thing month after month after month. They both started off with $10,000. And then every month, like clockwork, they're putting in $500 a month, $500 a month, $500 a month. So the person who's saving, which is in the purple block, at the end of 30 years, they have $146,000. Now, isn't that a good thing? Who doesn't want $146,000? You want $146,000. That's not bad. But the person who is investing at an average rate of return that's below the market at 7%, that same person has $665,000. Okay, it rounds up to 666, but I don't like that number. So $665,000, you have a $500,000 differential, a little bit more than $500,000, between the person who's saving and the person who's investing. So investing makes a big difference in the outcomes. Doesn't having $500,000 more at the end of 30 years give you more options than 145,000? Who's going to argue with me that you don't have more options when you have more money? I'm sure nobody's going to argue that point. So that being said, you want to be in a position where you can invest. And a lot of times, and what I'm going to talk about are the things that get in the way, the misconceptions, why people don't even jump in there, because there are so many misconceptions out there. But I'm going to talk about the main ones that stop people from actually even venturing off into investing and taking advantage of this wealth building opportunity. As women, we have to take advantage of this wealth building opportunity. So myth number one that I want to dispel for you right away is you need a lot of money to invest in the stock market. So a lot of times I get some of my clients that tell me, well, I was under the assumption that I would need tens of thousands of dollars to invest in the stock market. That is a myth. You don't need a lot of money to invest in the stock market. You can start wherever you are. So let me give you an example. So let's say you take $5 a day, $5 a day, and you start investing. And that's the cost of, well, McDonald's had these $5 meals, but I don't know if that picture is updated or not, but I know my kids like Wendy's and they have the $5 biggie bag. So let's say the cost of a $5 biggie bag, or you're not into fast food, you go to Starbucks or your Dunkin' Donuts, your favorite coffee shop, those coffees, you get a double pump of this, that, the other. It's going to cost you more than $5 to get that, right? So imagine that amount of money that you're investing on a regular basis, and it doesn't have to literally be $5 a day. Let's say you put $5 a day or $150 a month. You're going to spend that money somewhere. Why don't you pay yourself first and invest, right? Because at $5 a day, 10 years, you're going to have about $30,000. After 40 years, that's almost $1 million. So doing it with consistency, even if it's small, yields big results. And that's what sometimes people think, oh, well, I need a lot of money. No, you don't. Just need to be able to be investing in the right things. You need to be investing with consistency. And you need to make sure that you have that commitment. That's going to be your formula for investing success, making sure that you have the right rate of return and that you're investing with consistency. All right. So on top of that, not only can you start to invest with $5 a day, there is what we call a concept of fractional shares. So what does that mean? This is an old picture, but conceptually it still works. Amazon is now trading at over $230, but let's say back in the day it was trading at this amount. So let's say you have a company that's trading at, in this particular case, $1,700 for one share of Amazon at the time. And you might tell me, well, Myrna, I don't have $1,700 to put in Amazon. Well, you might not have $1,700, but maybe you have 100. In this particular case, it's $100 you can invest, which comes up to 0.057 shares, but you can invest in a company that's a good company, good growth prospects, and that can actually be trading at a higher amount. You can invest whatever you have. So it is very important that when you are going to, and if you are in the stock market, well, you need a brokerage account. So when you have a brokerage account, you need to make sure that they allow you to do fractional shares. And you have to check that, because if you can't do fractional shares, right, then that means that you need to have that $1,700 in order to invest in Amazon. So you need to make sure that your brokerage account allows for fractional shares, because this will allow you to invest in a quality company that might be highly priced, but you can invest in it with whatever you have. So that's important. Having a brokerage account that allows for fractional shares. Fidelity is one. Charles Schwab is another one. If you're not on mute, go ahead and mute yourself. Okay, so Charles Schwab is another one. So those two accounts allow you to do fractional share. E-Trade, unfortunately, does not. So do your research, get a brokerage account that allows for fractional shares. And then the other argument is that a lot of these accounts, you can open them with $0 account minimums. So a Fidelity, a Charles Schwab is not going to require you to put in $1,000 to start your account. So it's very important to understand that you can start wherever you're at, $5, $50, $100, $5,000, $10,000. The point is to just start. All right. So myth number 2 that I often get is, Myrna, I work hard for my money, or I've, progressed in my career, or I've progressed in my business. And I understand that if I go put my money in the stock market, all of my hard-earned money is going to be gone because it's like gambling. That is a myth, my young friends. So this is not the prettiest of slides, but just want to show you, right? Every year, the S&P 500, which is a group of about 506 companies, which proxies the market, right? What the average returns have been every single year since 1995. So if you take a look, right, anywhere that you see a negative, that's where the market went down. So we had a strip of where the market went down in 01, 02, right, and 2000 to a factor of 22%. But those are only, that was like the most that the market went down was in 2008, was down 36%. So down 36%, yeah, that's substantial. That's material. You don't want your money going down 36%. But the point is, if you look at all of the returns over all the years, there are only a few negative returns in there. So if you're in 2008, the market goes down 36% and you're panicking and you're saying, oh my gosh, I got to get out, you're going to miss out on the returns 25, 14, 32, there on after. So you have to be slow and steady and understand that, yes, the market's going to go up or down, but you're not going to lose all your money if you are in the right investments, right? Because if you go in and your Uncle Joey told you about a stock tip and you know nothing about the company and you don't know what you're doing, yeah, you can lose your money. You decide to put all your money there. But if you have a strategy where you're taking advantage of the market at full, then you're not going to lose all your money. So that myth, it's a myth. Now, if we look at the returns in recent years, so far in 2024, this year has been a gangbuster year. And this was like 2 days ago. I haven't pulled like what it was on Friday, but it's 27.4. So that means if you had put money in S&P 500 in the market as of January 1st this year, you would have made 27% on your money. Where do you do that? Not in your savings account. That's not going to happen in your savings account. So you have got to be in the game. So you're not going to lose all your money. You want to be able to put your money in something like, an S&P 500 index fund, for example, that mirrors the market so that you can get these potential returns and your money is spread across 506 companies. All right, myth number 3. You have to be a financial analyst or you have to be somebody that's great with numbers to understand investing. Look, I used to be a financial analyst, an equity research analyst more specifically, working for a small investment bank where I used to work and pour over financial statements to recommend stocks to institutions. You don't have to be that person to get in the game because there are so many ways for you to be involved. And I have clients that tell me, Myrna, I am not good with numbers. Can I do this? And I tell them, yes, you can. And then they realize that they actually get excited about understanding the stock market and investing. So you don't have to be that person that's great with numbers, that's a financial analyst to understand what's happening. So here are a few client testimonials of mine where a client was telling me she didn't know anything about investing, didn't even start investing until she was like 50. And she sent me a note saying, thank you for all the support and guidance that you provided me. I'm an investor because of you. She never thought that investing was possible for her. I have other clients here that came from the same point where they weren't investing. They didn't know about investing, right? One client says her portfolio is now worth $33,000 and she's been doing and putting money in, and technology sector is doing good for her. Another client of mine, this was back in February, says a company called Palantir is up 25% for her. And now Palantir is like gone through the roof. I have another client of mine who got in there and she's thinking logically about her investments. Is she supposed to invest in the Qs, which is NASDAQ index, or NVIDIA, which is a stock that I like? And she's making the decisions and understanding the trade-offs between risk and return. And these are clients that were not investors. They were not, numbers, equity research analysts. They didn't know the stock market, but they are going in there. They learn what they need to learn after working with me and understand what needs to be done so that they can go after that money that's available in the market. Even more client reactions. One of my clients, this is a very recent client. This is the last, cohort that I had in my group coaching program. She said, I'm trying to not get addicted to this, so I'll pace myself. This is someone, she says, I didn't think I would because I've always hated numbers of all forms. And this is someone who hated numbers, and now she's trying not to get addicted because she's so happy and she's understanding what needs to happen in the stock market. Another example of a client's portfolio here, snapshot. She sent me the snippet about how everything was going up and her actual investment decisions that she made and how she's happy with her portfolio. So that's myth number 3. You can do this, even if you start from a point of not being educated. Myth number 4, you can just sit on the sidelines, take your time. The stock market's gonna wait for you. And whenever you decide on doing something, you can do something. That's a myth. The stock market waits for no one, right? And when you put and you defer the decision, that's money that you are leaving on the table. I cannot stress this enough, right? You need to be in the market. You need to be in there investing consistently. Now, this is an example of a stock that I like, that I talk about in my investing group coaching program, that I talk about with my investing circle clients. It's NVIDIA. And NVIDIA, if you had literally $10,000 invested in NVIDIA as of October 31st of last year, today that would have grown to $36,000. Now, not all stocks are NVIDIA. Don't leave this talk understanding that all stocks are NVIDIA. Not all stocks are NVIDIA. But my whole point to you is you cannot afford to sit on the sidelines because the stock market is moving. Now, you might be intimidated and say, oh my gosh, Myrna, what am I going to do? How do I do this? There are so many choices or options out there. You can invest in stocks. You can invest in mutual funds. You can invest in exchange traded funds. Now, if you're kind of gun shy and don't want to pull the trigger on your own money, I'm giving you a resource right here, which is on investopedia.com. There's a stock simulator where you can go trade fake money and get a feel for what's happening in the market. Now, my last recommendation is this. If you are really, really gun shy, you don't want to work with an investing coach like me, you don't want to go out there and do your research and understand what's happening, then many banks right now, banks and brokerage firms have robo-advisors. What's a robo-advisor? That means it says, okay, Laura, I'm going to ask you a series of questions. Are you going to take to the bed if the market goes down by 20% in one day? Are you going to fall into a depression? Now, based on how you answer the questions, the computer, the robo, is going to generate, based on the algorithm and how you answer the questions, recommended investments that you can get in. Now, typically, my experience has been that robo-advisors are definitely provide more conservative investments, but at least it's a way to start, right? Fidelity has them, Wells Fargo has them, Chase has them. So go out there and find out. If you are not involved in the market at all, do something, take action. All right, so since it is the holiday period, and I know we're going to time soon, it is the holiday period, I wanted to give some ideas on gifts that keep on giving for the holidays. So instead of you saying, okay, let me go get that toy for my niece and nephew or something, give them a gift that's going to keep on giving, right? You can open a custodian IRA for them. So that's a custodian account where essentially you can put money in, invest in a stock, and they can get it after they turn, I think, 22. You start them early in the process. A 529 plan. That is a plan that you can open to invest in them for their college education. Right now, as of this year, I believe that if that child decides not to go to college, that money will convert into a Roth IRA for them, right? Or you can assign it to another kid that decides to go to college. So a 529 plan. And then there's stockpile.com. Stockpile.com is where you can get gift cards for a specific stock. So if I want to gift, my nephew, and I don't want to open an account and I want to gift him $50 in Amazon stock, I can go to stockpile.com and gift him $50 in Amazon stock as a gift. And then last but not least, since we're on this call, I am going to talk about my Investing 101 program. This is a program where I've helped many, many women understand the nuances of investing and help them get started in terms of becoming active investors. And what do I mean by active investors? I mean somebody who is investing month after month after month in the market. Because investing one time is great, but when you're investing over time, just like we saw in the initial chart, investing over time moves the needle when it comes to your money. All right, are there any questions? Okay, I see a question. If I can get to the chat, hold on. Trying to get to the chat here that's acting up on me over here. Okay. Would you recommend penny stocks as a path to the market for the investment shy? No, I don't recommend penny stocks, Afo. Why do I not recommend penny stocks? Because a lot of times penny stocks, for those of you who don't know, penny stocks are stocks that are trading at less than $5, $5 and less. So I don't recommend penny stocks because a lot of times, why is a stock a penny stock? Those tend not to be traded on major exchanges, would tend not to be as liquid, right? Or something major event may have happened. You may have been a major company and everything was going well, and then all of a sudden something happens and you're trading less than $5. It could represent a good opportunity in terms of movement, right? Because if you have a stock that's at $1 and something happens, it goes to $2, oh, that's great. You can make some money. But I don't deal with penny stocks because I tend to trade with companies that are solid, established, growing, and that have long-term possibilities. That's not to say you can't make money with penny stocks, but if you are investment shy, for me, being in penny stocks is more of a risky proposition. If you're really investment shy, go invest in an index fund, right? Go invest in, a company that has more long-term growth prospects than, penny stock that you're kind of taking a chance on. Should an individual's feelings about the current leadership of a company drive investment strategy, or should a current potential investor focus on long-term potential performance? If I can read the rest of the question. Performance of a company. So an individual's feelings, we are all, women here, and an individual feelings about the current leadership of a company, yes, can drive your investment strategy. I don't invest in things I don't believe in, and I don't invest. I could have companies, and I'm not going to name any names, but there are companies out there where the leaders are not representative of what I want or not representative of my values, right? I'm not going to invest in companies that don't represent my values. And if the leaders don't represent those values and the companies don't represent those values, yeah, it could be a great stock. It could make me money, but I'm not investing in it. As an investor, you have that option and opportunity. So yes, your feelings can come into play. And as women, I know that we need to have our feelings come into play here. So yes, I would say you can put that as part of your overall strategy. You want to definitely focus on the company's long-term potential and performance. That is definitely key because that's going to tell you what needs to happen. All right. Last myth, learning to invest in the stock market is complicated and it takes too much time. So I'm going to tell you a little bit about my program. It doesn't take a lot of time because I've had women go through this program very successfully, and we are all busy women. I deal primarily with busy women, women who are, in the height of their careers, or women who are, generating money in their businesses, or a combination of both, like myself, where you don't have time to waste and you want to be able to make the most of your money. So when you sign up for my program, you're going to fast track your money growth. You're going to feel confident about your investment decisions. You're going to be able to boost your income without working harder, because nobody wants to work harder. And you're going to understand your unique investment style. So when I say unique investment style, and we go through more of this in the program, is that my preferences and what I invest in will not be what you invest in. All investors are not created equal. It's kind of like food, right? When you go out there, you eat food. Some people like spicy food. Some people are vegan. Everybody has a preference. So it's the same thing with investing. Then in the program, you're going to have access to a live Q&A call monthly. So every month we meet, you got questions, you understand that. A one-on-one session with me, that is critical. That is the difference between my program and any other program. Because how many times have you signed up for a course and you didn't finish the course and you didn't implement the course? In my program, I'm going to make sure that you're going to be on track to be investing in something, and that you are going to be on track to be doing it month after month after month. Now, if you want to expand beyond that, great, but we are going to implement. You have instant community, tons of ladies in the community, and easy to follow lesson modules. There's only 5 of them. You get through the 5, you book your implementation call with me, and you can do it at your own pace. And then you have access to me. So you have access to me for 30 days, unlimited, Voxer access. That's like a Facebook messenger, right? You can ask me any questions while you're going through the information, and you can work at your own pace. So what makes us different is really access to me as a chief financial officer. You know, my time is very valuable, but you have access to me for any and all questions, and the implementation call. That really is it. And then I make it simple. I don't talk jargon. I don't make things complicated. We want to move on. We want to be investing. And so making it simple is the key. So the sooner you start, the better. Tomorrow isn't guaranteed. And I want this for you, right? I want you to be able to build your wealth by using the stock market. And the stock market's been growing like gangbusters. I want you to have the options that come with more money. So you can start as soon as you sign up. Here's the QR code and the link to the actual program. And it's also available inside the Facebook group. You'll see it in the profile. And then last but not least, if you want to book a call with me, it's free. It's a free investing strategy call. We can talk about where you are, where you want to go, because 2025 is going to be a different year. And I want 2025 for my clients that started, in 2024, 2023, life is great now at the end of 2024. I want that for you too. All right. Are there any other questions? As I stop my screen share. Any questions? Okay. Masha, do you need the child's social security number for custodial accounts? Yes, you do. You do. So you gotta be in tandem with that person, or the parent, if it's your nephew, niece, whomever you want to open the account for. You need their social security number. All right. Any other questions? Okay. Wait, do I see any? No. Seeing none. All right, guys. So I hope that you leave this particular session with the intent, if you're not investing, to go out there and start investing. Talk to me. If you need help, you need more support, and get in the game. Because as women, we owe it to ourselves to get into the game. If you have a 401k with your company, go out there, make sure that you're participating, particularly if the company has a match. Because if the company has a match, that means it's free money that you don't want to be leaving on the table. So make sure that you're participating. Open your Roth IRA if you're eligible. Make sure that you're contributing and that you're investing in some way. All right, everybody. Have a great day. Hopefully you'll still keep on with the other sessions of the summit. The next one up is going to be about health, right? And the cost of approval. All right. Take care, everybody.